All right, let's talk about one that's a little bit wild and woolly. It's got a little hair on it. It's so woolly. I tell you what, man, oh man. This one's Stillwater Mining Company. We'll do just a quick little rundown on it. We've typically been looking at companies that have some fairly steady incomes and although the gun companies, they've been a little all over, and oftentimes their sales and whatnot have been affected by external environment items, but boy, I don't think any more so than Stillwater Mining. This is a Montana-based corporation, so it's kind of an interesting choice. Now, dealing with it, though it's a bit awkward. There's some weird things. Okay, yeah, I should stay away from weird. Maybe not so much, but it's revenue a little bit all over the place. Now, as you might expect, and what I think you'll probably tell me in your report is that its revenue is based on, of course, how much stuff it can produce, the quality of the ore, things like that, but also the spot price of whatever the commodity is. And so they might be dragging as much out of the ground this year as they did this year, but their revenue is a lot more back here simply because the spot price was higher. That's really possible. Cost of revenue, and I have to admit that sometimes especially these mining companies, I'm a bit suspicious of them. Mining companies in Montana, maybe in particular, that their cost of revenue might be a little bit contrived. You're not going to find this in the financial statements, and so this is maybe me more anecdotal than anything. Although you might find it if you look for like rents and leases and those types of things. I don't know why, but I've sometimes they're required to do a lot of reclamation and do those types of things, and it just sometimes I get the feeling that maybe they're pushing money to other entities in order to avoid ultimately those reclamations that they have to do. And I know that some of us are familiar with some projects that have happened here in Montana that the reclamation didn't happen. Typically the main company, the company that would have been held responsible, files bankruptcy. And I've often wondered if they're doing a little financial manipulation in order to accomplish that. And one way to do that would be to have subsidiaries that you rent your equipment from, or those to maybe even that you sell your product to, and you can sell it and save some money and whatnot. In fact, there was a case, it was in the paper not too long ago, of I think it was a Montana coal company that, while they were producing the coal in Montana, they were kind of technically selling it out of Wyoming through sleight of hand financial maneuvering, because the taxes for it to sell it out of Wyoming were a lot cheaper. Yeah, it happens. Okay, so we got to look at the revenue and tell me about it and what's happening there, and also the cost of revenue and why that's happening like that. Then I got to know this. Here in 2013, there's this huge operating expense of $456 million, it looks like. Okay, and so obviously that created a huge loss when they had that big operating expense, right? And so we kind of need to know what happened there. And when I look at the cash flow, and I'm also wondering if this might have contributed some to the revenue for that particular year. Investment asset impairment. Okay, and you can see investment or asset impairment charges, but in this case it's a positive to cash flow, and they had a couple other smaller ones, and my question might be, was that perhaps the sale of an asset? Okay, and then likewise, when they sold that asset, did they end up having a fairly large charge as we go back? When I looked at that for the income statement, was that maybe a charge that was related to that? Okay, that this other operating expenses might have been a charge that could have been related to the sale of an asset, so they actually profited from it, but they also have to have some charges that are involved in that. I'm not sure, but that's one of the main things that jumps out at me with this company, along with the fact, I guess, that it's kind of sporadic and all over the place. We've looked at a lot of companies that have been buying back shares. But this company is increasing the number of shares outstanding. So it's actually got some other shares outstanding. You might take a look, because this is interesting, that the diluted shares, and they jump all over the damn place, went up, a little down, up, right, and then back down. This could be compensation that they're giving, would be my guess, and oftentimes diluted is compensation in the form of stock or stock options that they're granting to management, and they could well be doing that, and then they might be turning around and buying it back, in years like this where it gets back to even, years like this where it gets back to even. That might be a way too that they're unloading some of their cash and profits, to avoid ultimately some of the reclamation and stuff that they might have to do. It's possible. So you award them, you buy it back when the stock options mature, and basically you're paying them sort of, kind of, but not really, and yeah, gets to be, that may be a little further than we want to go, okay? But take a look at those things, definitely, okay? Then the other thing to look at is the balance sheet. We probably see some things on the balance sheet, gross property and plant. So that took a big reduction, and it looks like that was probably that same year that I was guessing that a sale might have taken place. Okay, pretty good decrease, right, in non-current assets. Net property and plant, pretty good decrease there, and so that's what I'd take a look at and see what happened in that particular year. They increased their long-term liabilities here and then decreased them here, and that's kind of interesting, and yet had some capital leasing here and here. One was a short-term, one was a long-term. Those are a little bit confusing. I'm not sure why those might be happening, and it would be worth taking a look at. Total stockholders' equity, it's it's kind of hanging in there again, a little bit up or down, probably depending on the year. And its income is so all over the place that it just plain kind of interesting. I didn't look at the income statement in terms of the percentages, and part of the reason I'm not going to spend a lot of time is that, as you might expect, it's just all over the place, right? A gross profit that ranges from 9%, the most recent, up to its high was 24%. Huge, right? And costs and expenses that range from 51%. And again, my guess is that's the year that they might have had to write off some extra expenses, maybe as a part of sale or something. So you may focus a little bit on that, but obviously then you want to get to the end here and tell us whether you think this one's a good investment or not. Probably depending on whether you're a speculator or not. So quickly, those were some things that I would look at with Stillwater Mining.